Hey, what's up, everybody? I'm about to go through what I did today. Very good day, up a little over $4,000 on the day. Um, and I just want to share my thoughts on the day and how I was able to, switch ideas on a dime and just remain flexible, especially since I was playing zero DTE, which is very risky. I do not recommend play traders to do that. You can really lose a lot of money if you're options in general. You can lose a lot of money if you're not careful. So I'm gonna break down everything right now, and I'm gonna go through the main trades of the day that gave me that P&L. So let's see here. Main Thinkorswim. Boom. All right. So here is the fills. By the way, to know if it's a live account or a fake account, you go at the top left here. It says real time and it's green. A paper trading account would be yellow. So anyway, what you have here is the fills for today. All of these were day trades. 115, which was today, zero DTE, and I was playing, same day expiration contracts, which is again very risky. So if you can just take a picture of this real quick. I'm not going to keep going back and forth to it. I have it on a separate um, screen, and that's how I'll, keep talking about the entries. All right. So you can just pause it real quick and take a picture of this, and then we'll move on. Got it. All right. So now coming to Amazon, my first entry of the day was at 938. Now, if we look here, this is the daily candle, and these are the two levels that I have. I had a 31.25 and I had a 31.40. So my first entry at 938 was as soon as it broke this level. I did not wait for confirmation. I did not wait for the candle to close. That was the first mistake right there, right? And then it rejects. And then what do? At 940, I buy another contract on this candle, thinking, okay, it just pulled back, consolidated, it's about to skyrocket now, right? So I buy a call, which is, it would help if the stock goes up. If the stock goes up, I make a lot of money on calls. If you buy a call and the stock goes down, you lose money, all right? Just for those who are not familiar with calls. So I get another one at, as I'm down $400, I get another one of Amazon, right? Which is very, again, risky because it's zero DTE. So, and then I buy another one at 944, anticipating a bounce on the 31.25 level, averaging down again. I bought that one for $600. And then that was my last average down. So now here is where things get, things could have went wrong, very wrong. But because I was able to notice what the market is doing, the overall market is doing, because I'm watching SPY at the same time on a different screen. SPY is basically the overall market. If SPY is crashing hard, everything is going to crash. If Nasdaq's crashing hard, everything is going to crash. So that's why I have the Nasdaq and SPY. The ticker for that is SPY and QQQ. So I'm watching it here. And at the same time, I'm watching it on a different screen. I have a 5-minute SPY on that. So 944 was my last entry for Amazon. So at this point, I have 3 contracts. And I'm watching it. It's not looking too good. And then 955 is where everything changed. If you're looking at the entries, if you took a picture of it, you'll see that at 955, 956, I exited all my Amazon contracts. I didn't even look at how much I was down. I was down big, about 1,600. So if you go here, you'll see that I lost $1,600 on Amazon. I was playing 2 different strikes, and I ended up losing a total of 1,600 on that. But I did not care. A lot of times what happens is people, they focus on the 1,600 and they'll say, nah, I want to make it back. So they'll sit here and wait for the stock to come back. But in my eyes, Amazon just made a low of the day. The low of the day at that point was 31.18. So it just made a low of the day, and now it can really dump. And it's going under the moving averages. It's not looking too good. And at the same time, SPY wasn't looking too good either. I'm going to talk about that in a second. So 955, I was like, nope, I am out. I don't care how much I'm down. At that point, I just moved that out the way. I was like, yo, exit right now, because whatever I'm down, I could be down much worse in a couple of minutes, because Amazon just made a low of the day, and it can just move down, $10, $20, which it ended up doing right after I exited, right? About $15, and it kept going down. But anyway, 955, get out of all the Amazon. and then look at SPY. I entered SPY at 9:55 as well. All of this happening in the same minute. I was able to just switch on a dime and say, hey, market's not looking too good. So now let's check out what made me think SPY was going to dump and why did I, trade it so aggressively. So this is the 5-minute chart. And if you look here, you'll see this level, 377.1. Now pay attention here. This is very important. 377.1, the low of HM, which is a hanging man. Where's the hanging man? It's on the daily. So if you zoom in here on the daily, it looks a little disgusting here. Let me show you on SPX. SPX and SPY are the same exact thing. The candles are the same. So this candle right here is what a hanging man is. Let me zoom in more here. So it looks like a hammer, but it actually comes after an uptrend, has a small body and has a long lower wick. When this comes after an uptrend, that's potentially a bearish reversal. So the low of that candle was my confirmation, right? Since it's the potential reversal, I'm watching where the low of that candle is. And as soon as it goes under that low, it's looking very dangerous. So the SPY, the low of the hammer on SPY, the hanging man, I'm sorry, which is this candle right here, the low was 377.1. Now, if you go back to the 5-minute chart right here, that's that level. So the first things first, SPY gap down, and we started the day down 0.5%. Now, one thing I also like doing is that I connect low points like that. This is a potential bear flag, right? Once it breaks to the downside, there's a higher chance that the stock continues going lower. So I don't usually use these confirmations with the trend lines that are from the 5-minute as a main confirmation. I don't use them alone. It has to be combined with something from this bigger time frame, which I had from the hanging man. So in this instance, this is how it looked. It was looking like this. This was the 9:55 candle. It was looking like this. It was trending higher, but it reversed, failed to make a higher high on the day, and it went under that level, right? So in this candle right here, as soon as it held under 377.1 and it's breaking that was my double confirmation right there. So I ended up going in with 50 puts, and then 10 o'clock, let's go back to the 1 minute. So 9:55, this is how it looked. So because here, it broke this right here, and it broke this critical level, boom, I got 50 puts right here. And then it held, right? At this point, I still had backup from this trend line, and it still never closed above the moving averages. It never closed above that level. Pay attention to how it went there and it rejected. So that gave me strong confirmation. So as soon as it rejected and it held down there, 10 o'clock, I get another 25 puts. So at this point, I have 75 puts, 0 DTE, about 5K in this position, 0 DTE. And it's holding. I was going to exit if it made a higher high on the day, which probably would have made me lose $500-600, but I was willing to let that happen because I see it was just a high confirmation play. So now, after I get in at 10 o'clock, smooth sailing from here. The stock holds below the moving averages. It holds the level, and it starts to make a lower low. If you look at it from here, this was the beginning of the day. Boom. Now, as soon as this happened, P&L, I was not watching it. I did not know how much I was up. All I was watching was where the bid price is. If I wanted to get out right away, the bid price of the option of the contract that I was playing, which shows up here when you're in a position. So also what you can see through the fills is that I ended up scaling out. So I got out of a third of the position, 25 contracts at 10.06, which is around right here. I had already gotten a very, very good move, about $1. So that paid, I don't know how much it was paying, but all I know is that, hey, take some risk off the table, take some profit, right? Just in case, to avoid any crazy move to the upside and risk losing all that profit and, lose even my own money. So the biggest thing that helped me here make more money that I even was trying to make was the fact that I was not looking at the P&L. I did not know how much I was up this whole that whole time I'm in the trade. All I can see is how many contracts I have and what the bid price is. So boom, 1006, get out of 25 contracts, and then 1008, around here, I was like, okay, I might pull back. Let me I take out 10 more. So I keep scaling out, right? And then I think 1006, I even take out some more, 1008 more, and then I scale out completely by 1008, this candle, right? So I end up catching the majority of the move, about $2 on SPY. And that resulted in me making about 5.5K. So a lot of times, we're going to talk some psychology here. A lot of times when you're so focused on, oh, how much I'm up, then you're going to like sell too early because you don't want to give that up, right? So I was not aware when all I seen when I was up 1.6K because I was trying to recover Amazon. As soon as I knew I was up 1.6K, I was okay, let me stop watching this shit now and let me look at what the chart is doing. Let me look at level 2. Let me look at the candles. Let me focus on that. So as soon as I checked it, I was like, oh, I made 5.5K on that drop. The only reason I was able to execute effortlessly with no stress, with no emotion, was because I wasn't looking at the money. A lot of times people, when they're up, let's say they're in the same position. Me, if I was in this position and I was so focused on the money, as soon as I was up 2K, okay, get out of everything, boom, boom, boom. And I'll only be up on the day, $400. After putting myself in a whole 1,600, boom, I'll be up 400. Instead, I just completely took that number off. I was not looking at it. And I made the play. I watched the buyers and sellers. I watched level 2. I watched the candles, watched how, the price action, right? At the end of the day, I wasn't looking at no news that was happening for it. I was just literally watching the price action because I'm a technical analyst. That's my edge. News definitely has its place. You can definitely use news. But in times like this, if you go and check, what news is coming out that's making SPY dump, at that time, boom, I already got up, and you already missed the move. Like in literally 4 minutes, 5 minutes, SPY is down 0.5%. By the time you're looking for news at that point, you're going to miss it. I did a couple re-entries after, ended up that after that trade, I think 3,900, but nothing after this really was crazy. SPY was the biggest trade of the day. I ended up making about 5.5 or 5.3 from 10 o'clock or from 9:55, and I exited by 10. And that resulted in a 4K day, right? That's pretty much it. That's how I was able to make that in, day trading options. Again, this is very risky. I don't recommend beginners to do it, but there's a lot of prep that can put things in your favor. I mentioned candlesticks. I mentioned moving averages. I mentioned levels from the bigger time frame. I mentioned some psychology, not watching, the money, focusing on the chart. But yeah, that's pretty much it. Thank you guys for watching. If you have any questions, please let me know. If you want any, if you have any videos that you'd like to watch, any topics, please don't hesitate to reach out. And I'll see you on the next episode. Boom.